Welcome to Fear and Greed, business news you can use today. Tech stocks, Bitcoin and some very big local companies are sold off as investors fear higher interest rates. Australia's big energy companies come out in support of net zero by 2050, and Amazon, Temu and Shein are forecast to dominate the local online retail space within 12 months. Plus, Prime Minister Anthony Albanese says Australia won't co-host next year's COP summit with Turkey, and Westpac sends bankers to the bush. It is Tuesday, the 18th of November 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, fear rather than greed is gripping global markets, with cryptocurrencies tumbling, Wall Street tech heavyweights mostly going backwards, and even Australia's two biggest companies, the Commonwealth Bank and BHP, losing ground. Meanwhile, safe haven investments like gold, well, surprise, surprise, Sean, they are surging again.
In the parlance of investors, it is a risk-off market. They're battening down for a rough period, fear rather than greed, as you put it. Anyone want to know why we called our podcast Fear and Greed? There it is. Markets are driven by fear and greed. The main problem really is the lack of information. The US government shutdown means investors are buying in the dark. Locally, the real possibility of no more rate cuts is hurting the local market. So let's have a look at crypto markets. Bitcoin, it's lost 30% of its value since its high last month. It is now back to its level at the beginning of the year, with institutional and retail investors dumping the cryptocurrency. It fell back below $93,714 a unit yesterday. That was the level it was trading at the end of 2024. Its peak was $126,251 a unit. On 6 October, Donald Trump made a couple of comments perceived to be negative to cryptos. It started tumbling. Locally, the S&P ASX 200 is trading close to 4-month lows, with the biggest drag, without a doubt, being Commonwealth Bank, which is off 8% over the past month. BHP is down 3% in the same period. But the biggest losers over the past month have been the tech stocks, with the AI Technology Index. Say that again. It's not AI. It's the All Technology Index on the ASX, off more than 12%. Yesterday, market leaders WiseTech Global and Xero both fell to 52-week lows. Meanwhile, gold surging back above $4,100 an ounce. Silver's back above $50 an ounce.
Sean, we've talked a lot about the banks. We've talked a lot about commodities. But why are tech stocks being sold off?
It comes down to valuations and whether the excitement over AI will end up in real earnings. There are a few naysayers out there, Michael.
What?
It isn't right. It isn't right to say naysayers. Good word. It isn't right to say big spending tech stocks are on the nose, but there's just a little bit of a whiff about them at the moment. And the stocks that have done or sort of gone least hard into AI, such as Apple, are currently doing best. So a basket of tech and AI stocks on Wall Street has fallen about 8% over the past couple of weeks. That's the biggest drop since a big pullback earlier in the year. But Apple's share price is rising. Apple's CapEx, expected to be about $14 billion this fiscal year, sounds huge, but it's actually not. Microsoft, it's going to spend $94 billion compared to Apple's $14 billion. $94 billion for Microsoft. Meta, a company half Apple's size, $70 billion. That's worked against Apple until now. Now people are getting nervous. So what you are seeing over the last little bit, up until about a month ago, Apple was the worst performer of the Bloomberg Magnificent 7 index.
Yep.
Over the last month, Apple's up 10%, Microsoft's flat, Meta's down 14%. Not necessarily the end of the tech boom or the crypto boom for that matter, but there's just a lot more cynicism in the market right now.
That is really interesting that's playing out that way for Apple, because even when the new iPhones were released back in September, there was criticism of the fact that they really hadn't done much for Apple Intelligence, that Apple Intelligence was there, but it wasn't as incorporated and enmeshed into the new operating system as you would expect it to be, and there wasn't an update for Siri that was going to use Apple Intelligence in any meaningful way, and everyone was talking about, Apple's being left behind now, and maybe they might have made a good call.
Yeah, Apple proponents say, well, they're just going to wait to see what works best, and then they'll jump in and sort of coattail on that. Maybe that's what they're doing, but it's just really interesting that they're the winners at the moment.
Yeah, indeed. What about the broader ASX yesterday?
The S&P ASX 200 closed flat at 8,634 points in a case of beautiful timing, given the top story being tech stocks being sold off. The tech stocks were the best performers yesterday. Along with energy companies, healthcare was the worst performing sector. BHP's shares initially fell 2% after the English High Court found it liable under Brazilian law for the Fundão Dam failure. Now, the big Australian closed down more than 0.5%. It sort of pared back some of those losses. Banks were mixed. Commonwealth and National Australia Bank were lower. Westpac and ANZ were higher. Macquarie fell more than 2%. Fortescue Metals Group was the best of the large caps, up more than 1%.
We talk a lot about ETFs, Sean, and the Australian Exchange Traded Fund market has hit $322 billion, driven by a record $6 billion in net inflows during October. This is according to the latest Global X report.
And this supports our main story about the risk-off market. Now, the Aussie ETF market's up about 38% over the past year. An ETF, of course, basket of assets like stocks, generally a low-cost way to earn a return similar to an index or a commodity or whatever. Year-to-date flows now stand at $44 billion, putting the market on track to meet an anticipated $50 billion milestone this year. Is that a lot? Well, it was only $31 billion last year. So, yes, ETFs are growing big time. What's interesting is where people are putting their money into. Bond ETFs. Michael, don't roll your eyes. Bond ETFs. Exciting. A record month.
That is a thrilling ETF to own, isn't it? I know it's important, but goodness me, it's not the most exciting one, is it? Like, you look at gold and the NUG ETF. Like, that's an exciting one.
Look, $1.4 billion in bond ETFs, mostly Australian credit. That's exciting. Japanese ETFs. They're back in fashion.
Okay.
Other side of the coin, not so much enthusiasm for crypto ETFs. Not so much enthusiasm for tech ETFs. Just proving our point.
I'm always intrigued by the use of... I just love the language that we use to describe things, as you know, Sean. While we always refer to it as a basket, an ETF as a basket of assets, why can't we change it? What's wrong with like a parcel or a pot of assets, a cauldron of assets or something?
Well, see, I think this comes from a basket of currencies originally.
Again, same thing.
The trade-weighted index, been there forever, basket of currencies.
No, chuck them into the cauldron.
Right, the cauldron of currencies or what like that.
Yeah, there we go. All right, well, we are changing the world one word at a time here at Fear and Greed. Sean, we'll take a quick break. Back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has dismissed suggestions that Australia could co-host next year's COP climate summit with Turkey. Reuters reported yesterday that Turkey had made the offer, but Anthony Albanese said, nah, not possible.
Short of a breakthrough in the next few days, neither country will host COP31 next year. Elsewhere in politics, the fallout from the AFR Redbridge poll that shows support for One Nation hitting a record high, while the coalition tanks, has added even more pressure on Susan Lee. The poll revealed the coalition's primary vote fell 5 percentage points last month to its lowest ever rate of 24%. Support for One Nation rose 4% or 4 points to 18%. A little uncomfortable, a little close for Susan Lee. Her support as preferred Prime Minister has tanked to 10%. Compared to Anthony Albanese's 40%, while on a two-party preferred basis, Labor has had 56% to 44%.
Yeah, the way things are going, Susan Lee may not even get a chance to run against Anthony Albanese in 2.5 years' time. There seems to be a lot of confusion at the moment among the moderates in the federal Liberal Party, about who should actually be the leader, which is not what you want only 6 months after taking the job.
No, we know the Conservative Libs aren't big fans of Susan Lee. There were reports yesterday in The Australian that some of the moderates were deserting her too. That prompted the acting Senate opposition leader Anne Ruston to claim that the overwhelming majority of Liberal moderates back Lee. Overwhelming majority. Oof.
That's not
well put. That's not exactly.
It's an endorsement Is it a ringing endorsement? Is it the kind of unanimous support that you need as the leader of a party?
No.
Probably not. Okay.
No.
Now, Australia's biggest energy companies support the federal government's net zero target by 2050, and they've warned that failing to support renewables will only send power bills higher.
Just what the Libs need, just what the Nats need when they've dropped net zero because they want to get the price of power down. The actual energy companies come out and said, well, actually, to get the price of power down, you've got to go net zero. That's effectively it.
Yeah.
The chief executive of more than a dozen major electricity suppliers, including AGL, Origin Energy and Energy Australia, they're all members of the Australian Energy Council, said shifting to a mostly renewable grid was the best way to keep bills as low as possible. The CEO stressed the need for policy certainty and stability as Australia heads towards a tipping point. Now, the energy transition is underway. But the CEOs say it's as much about system security at the moment as it is emissions reductions. Australia's coal-fired power stations still supply more than half of the nation's electricity needs, but most of them are approaching the end of their usable lives and are due to be retired over the next decade or so, meaning they've got to be replaced by something, regardless of net zero ambitions. The industry argues the cheapest path for consumers is to invest in replacing ageing coal generators with firmed up renewable energy.
But investing in renewables, right, is going to cost money, which is a lot of the argument that has been made in recent days by the coalition. So prices are likely to go up.
Yes, the way the Energy Council puts it is that replacing ageing power stations is not costless. And will
well played. Yep.
It will push up people's electricity bills at least for a while. So building more wind and solar farms, storage projects, all the thousands of kilometres of power lines and pylons and stuff like that to bring the whole market together, that's going to add cost. That will be passed on to consumer. But their point is, in the longer term, it's cheaper to do it that way than try and rejig coal-fired power stations.
Now, Westpac bankers, we mentioned this one in the intro, Sean. Westpac bankers will be sent to country towns to work from council offices or local libraries one day each fortnight, and the bank won't close any more rural branches until 2030.
The moratorium on branches is 2.5 years longer than the other major banks. The decision was announced ahead of the bank appearing before the House of Representatives Economics Committee today and tomorrow. The federal government's considering whether a levy funded by all banks should be created to support the delivery of regional banking services, a move that is opposed by Westpac and friends. The federal government has also forced the major banks to not close branches in the bush until mid-2027. Now, what Westpac has said is we won't do any closures till 2030. Over the past 5 years, 23% of branches in inner regional areas, that's about 252 locations, were closed, according to the Australian Prudential Regulatory Authority. In outer regional areas, about 19% of branches were closed.
How awesome that they get to go and work in the local library.
I think it'd be fantastic. So when I travel, I often find myself, if I go home to see my mum in Orange, I'll go to the local Orange library. I spend hours in there doing the show. It's great.
I frequently go. I mean, I was at the library yesterday and I found 4 copies of one of my novels on the shelf. And so I took some time to go around and reposition them. So that's now the moment you walk in the library, it's front and centre. So
everywhere.
It looks like, it's everywhere. It's all over the place. So I expect
you've got a reason to go to the library. You just go to find your own work.
Oh, yeah, that's absolutely right. And I would trust that the Westpac bankers, when they go to regional libraries, will look for my books, reposition them in prominent places as well. Now,
shameless. Go on.
Yeah. Well, I've never been anything but. Amazon, Temu and Shein, Sean, that's confusing, Shein, Sean, will hold more than 1/3 of Australia's online retail market by next year, putting a lot of pressure on local digital marketplaces.
That's according to investment bank Jarden, which forecasts that the 3 international retailers will generate more than $18 billion worth of sales locally next year, about 36% market share. Price-conscious shoppers, another hard one, price-conscious shoppers will be drawn to the global players, according to the report. Now, Jarden analyst Ben Gilbert, a regular on our show, said, I quote, retailers need scale or niche differentiation to survive. The market is bifurcating, with those caught in between Kogan, Big W, Myer and JB Hi-Fi Accessories facing the greatest risk as competition squeezes from both ends. According to Jarden analysts, Temu has priced its products between 30 and 40% cheaper than Amazon on comparable items. The price difference for Temu is even more stark when compared to other platforms, with its products generally being 30 to 70% cheaper than similar items.
Turning to international news now, Donald Trump has urged Republicans to vote to release files related to late sex offender and disgraced financier Jeffrey Epstein in a sharp turnaround after having previously...
Come on, can't we call it black flip?
It is a backflip. He's previously fought attempts to make the files public, and now he's saying Republicans should vote in favour of it.
The US president made the appeal ahead of a vote in the House of Reps set for tonight. Now, that was increasingly looking like it would have forced the release of the files anyway, so Donald Trump is probably getting in ahead of that. A growing number of Republicans have in recent days signalled they're willing to defy Trump in the Epstein vote, according to the Financial Times. On Truth Social, Trump wrote, House Republicans should vote to release the Epstein files because we've got nothing to hide. I'm sure there'll be many, many journalists and people poring over those emails when they come out, and we'll all find out whether the Republicans do have anything to hide.
Yes, I think that's probably the case. All right, up next is Fear and Greed Q&A. Today, Sean, you're speaking with Darren Hopkins and Brendan Payne, who are from McGrath-Nicol, great supporters of the podcast, and we're talking ransomware.
Yeah, it's fascinating. It's one of their annual reports on what's going on in ransomware. I'd like to say there's lots of good... Well, there is some good news in it, Michael. But there's also lots of bad news as well.
The thing I love about this one is that they give actual figures on how much businesses are paying in ransoms and how it compares with last year. It's really interesting stuff. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for the free daily newsletter. Thank you, Sean.
Thank you, Michael.
It is Tuesday, the 18th of November, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.